Okay, well, good morning, good afternoon, or good evening, depending on where your perspective is on the world, and welcome to FX Street webinar. This is Brandon Wendell with you guys today, and well, it's kind of an open Q&A day for me. I'm going to go ahead and go over some things I've been noticing in the markets and seeing what kind of opportunities there might be in the markets themselves. But I also encourage you to just type in any questions you have about any particular pairs, things that we are looking at in the markets, or if you have questions on some of the things that I do as trading techniques, I can go ahead and go over those as well. Like I said, it's kind of just an open discussion day for me, and I've just kind of been running through some of the different scans that I usually use for my markets. One of my strategies I use quite often is that 889 scan, and that's something I detail a lot more in my extended learning track program at the Online Trading Academy, so I'm not going to get too much into detail with it here. But just know it's a trend following system where I'm looking for a retest of a supplier demand zone in the direction of the overall trend for trading. So euro dollar, absolutely. Of course, I'll get to that one. That's one of the major pairs there, and I'm going to cover a bunch of those majors. I'm going to start off, though, by looking at the dollar index itself, just to get a broad idea of what the dollar's doing. And we can see, looking at the daily chart, we've been on a bit of a decline for the past couple of weeks here in the U.S. dollar. What I'm looking for right now is an area of demand where we may start to see a bounce from this move. And go ahead and grab a pen here. I'm going to write down your requests. I feel like I'm a disc jockey, writing down requests, playing all the hits all day long. Actually, it's kind of funny because I started off as a disc jockey in high school and continued that through college. Didn't work at a college radio station. I actually worked at a professional radio station. So everybody always used to tell me I got a great face for radio. Anyway, taking a look at the U.S. dollar, like I said, I'm looking for an area of demand to figure out where this decline might end, where we might see some basing and possibly even a rally out of it. Overall, bigger picture view, just looking at the trend, we're kind of sideways, stuck sideways between 79 and about 84. We did peak a little bit higher in this last move, up to about almost 85. And, that's what I was just noticing as well, Jonathan. I was going to say that I don't know if this is actually a fresh level, because looking left, which we always have to do, you can see that that is an area that has been tested once before. We only want to take levels that are fresh. And this one actually originated with what we call rally-based rally right here. You see this nice expanded range candle showing lots of buying pressure, and we've already bounced from that area once. So the likelihood of being able to bounce strongly again is not very high. So I'm going to have to continue looking further down and left. And I do see another area right here, although it's not as strong. And the reason why it's not as strong is when I take a look at this, I notice that we don't have very large green candles coming out of it. So notice the difference how we left here with this large green candle. Okay, and very little topping tail. That topping tail would show selling pressure, but there isn't very much there compared to what we have here. Notice the larger topping tail here, more selling pressure within it. Okay. Do you have a warning sign for when price might not reach your target? I can use the momentum just by reading the candles themselves. So generally, if I'm looking for prices to move to a particular area, I just look at the momentum of the candles. I always focus on 4 key things when it comes to candle reading. And number 1 is color. Okay, so when we have a lot of green candles, obviously the trend is intact. You can see right through here where my cursor is, in May we had lots of green candles, and then they were interrupted by red, green, 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 red, red, green, green, red, and that's when we started to reverse. So when you start to see the mixed colors in the candles, that's a warning sign your trend isn't very strong. And that's what we're experiencing right now. You notice on the daily chart, red, green, green, red, green, green, red, 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 green, red, red. So it's very mixed. And that's a warning sign that we may not actually be able to continue to move down. Next, I look at the shape of the candles. And what I mean by the shape of the candles, do they have topping tails or bottom tails? That's what I was just referring to. Anytime you see a topping tail, let me just go ahead and click here for a second, such as this candle, doesn't matter what the color of that candle was, but the fact that it has that big topping tail, that shows that there's lots of selling pressure there. And obviously, if we're running into an area with lots of selling pressure, we're going to be less likely to continue the overall move. Doesn't mean it won't, but it's just less likely. That's all. And the same thing happens if you happen to have bottom tails. Here we can see, let me just fix this real quick. Format, I don't know why that wasn't saved. There we go. Says default. So these bottom tails show you there's lots of bullish pressure. And with lots of bullish pressure, obviously you're less likely to continue in a bearish trend. So that's another warning sign I have. It's the shape of the candles. Another one, by the way, this is not color and shape and size, or, that's the next one, by the way. And the last one is location. The location is the most important thing. That's going to be supply or demand zones. But color, shape, and size as a combination can give me some warning as to where prices might turn. So the size is the size of the candle. Generally, if we're getting large candles at the beginning of a move, like this, notice we're moving in a downward trend, we get a very large candle, and we kicked off a nice trend. However, and that, by the way, happened several times here. Right there. Okay. Actually right here. So there's plenty of areas and plenty of examples of that. But one of the other things I usually look for is if we get a large candle after we've already been moving in a particular trend direction. If that happens, it's usually the amateurs are jumping in late. Okay. So that's one of the warning signs I want to look for to figure out whether or not trend is going to be likely to continue or if it's going to reverse. I don't know what that pop-up thing was. Okay. Yeah, as a matter of fact, I've written articles about this before. If you go out to tradingacademy.com, that last one on size, we have called Lessons from the Pros. So if you go to tradingacademy.com, you can go to Lessons from the Pros and subscribe if you want. I have, let me see, flagpole. I have an article that I wrote some time ago. There it is. Climbing a flagpole. And I probably rewrote it since then, but this was a stock article that I wrote because I do talking about trading. And one of the things I look for is that if we see, there it is, if we see a large candle after a move in price, so right here we're moving down, 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 down. Now all of a sudden we get this large candle moving down, and that's usually exhaustion of the move. And the reason why is novices chasing. So if we get a large candle after a move in price, that's usually we're going to be seeing reversals. So that's one of the articles that I've written for Online Trading Academy. And I'll go ahead and just post the link right there for you, so you can read more about it. And then, of course, the most important thing is location. Are we at a supply or are we at a demand zone? And the next question, how far back do I look to see if a level's fresh? I just look back to see if prices traded through that area before. So right here is my area that I'm noting as my demand. I look back, I see price traded right through that before. I don't have to keep looking back. Okay? And in addition to this level, there's another level just slightly below that as well. So looking at this, there we go. Got two levels of potential demand. And let me go ahead and refresh my chart here. Oh, I thought I had my labels in here. I guess I don't. Let me put those in. There we go. So we're looking at about 79.57 down to 45 for the first level, and then 79.23. Just move these around a little bit so we can see them better. There we go. All right. So those are the two levels there, 23 down to 78.91. So that's what I'm looking at for the U.S. dollar, although it is going to take a while to get there because we are seeing some weakness right now in the trend. We could get a bit of a correction, but possible continuation down. There's no really strong demand that should halt us from continuing to move to those targets I just mentioned. Okay. Let's see, 81.35 considered a good demand zone on the 4-hour chart. Let's take a look. Yeah, why do I like the retest? Well, what I'm looking for is where the institutional trading came in. Where's the strongest area of supply or demand? And when I look for the strongest area, once we return to that area, if we leave, just think about this. Okay, you're asking right now about 81.35. I'm not seeing anything at 81.35 as far as on the 4-hour chart. Let me go back a little bit further in time, but there's nothing there that I'm seeing. It looks different on my chart. This is the dollar index that I have. Mine's delayed a little bit, but it should still be the same by looking back at history. Anyway, what I wanted to see was if this area is fresh. But if you think about it, the reason why I'm looking for a retest, I don't know that this breakout's going to happen. We were moving down, 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 and then all of a sudden we get this breakout right here. TradingView.com. Okay, using a different one. All right. Anyway, when we break out like this, we don't know that's going to happen. Okay, but what we do know is that it all of a sudden showed that there was no more no more supply to push prices down, but a huge amount of demand. There was an imbalance here, and because we left the area very quickly, that shows that there's likely to be a lot of leftover orders. People who couldn't buy there because they couldn't get their orders filled because it moved away too quickly, or people who saw that it left the area quickly and want to buy once it gets back there again. So that's why I like the retests. Now, if we come back down to that area, there's likely to be some leftover orders. Now, the only thing I don't like about this area right here, that's just under 81, is the fact that it based there for quite a bit of time. Remember, I want leftover orders. I don't want to have an area where there was a lot of chance for people to get into the price, to get into a trade at a particular level. So when I'm looking at the dollar, actually, I'm not sure if I have the dollar futures on this account. Yeah, I do. I have dollar futures, but it's delayed. So I can actually look at the futures here, which is a tradable security. And looking at that, there is an area right here at about 81.50 that could qualify as an area of demand. So that may be what you're seeing. I'm not seeing it on my other chart, but on this 4-hour chart for the futures, right there. Okay, that looks a little bit better. We do have that area right around 81.50. As a matter of fact, let me get the exact numbers for you. Okay. Yeah, that's the one you were mentioning. That's what I thought. Okay. Yeah, that looks decent. You can see that we don't have any topping tails on the candles leaving. We leave pretty good compared to the size, the basing to the left. You're talking about all this underneath. Yeah, the longer base right here, the weaker that area becomes. But this is fine. Now, what you're asking about is the basing right here before we reach the level. That does make me worried. Absolutely. When I go into a zone, I want to go into a zone very quickly. And the fact that this is basing before it reaches the zone makes me less likely to want to take a trade there. Okay. That combined with the fact that we are in a very strong downtrend, you can see that my RSI, which I have below, I use 60/40 on my RSI as my indicator rather than using the traditional 70/30. And going back to my articles, if I type in 60/40, you'll see I have an article that describes the reason why I do this. Let me go ahead and copy that link as well. There we are. And the reason why I do this is because in a strong bearish trend, you don't go above 60 on all the retracements, and that tells you the trend is likely to continue. Okay, in a strong bullish trend, the RSI tends not to go below 40 on the pullbacks. Notice all these pullbacks right here, it doesn't go below 40, so that tells you the trend is likely to continue as well. Well, this is suggesting that the trend is still very strong to the downside. We're not seeing any weakness other than the mixed color and pauses on the way down. So that's not telling me this is going to be a very high quality opportunity. If anything, it might be a counter trend opportunity just for a small bounce. And then we're likely to continue down to those other areas I mentioned on the daily chart. But yeah, I don't like this area as much either, down around, what is this, 80, 60, 80, 80. Okay, right around the 80-80 area because we based for too long. I want to see that we didn't stick around there long and we left very, very quickly for levels. So taking a look at a couple pairs, we can go ahead and take a look at the euro dollar. Since we're seeing weakness in the dollar, it's not surprising to see strength coming in right now in the euro. And I'll start off on the bigger picture here and work my way down. These are some old levels that I had there. You can see that this level worked pretty well as an area of supply. We're still marching up towards that area. Don't know if we're going to be able to stop there. And you can see right here, if I draw in this area from the origin of supply, like I said before, I want to see leftover orders that are going to help push price in a particular direction. Well, we dropped, based, and we left that area very quickly with lots of selling pressure. We ended up using some of that selling pressure on this return. The second time up to that area is not as high quality because we're not going to see as many leftover orders. People were already able to trade. They were already able to trade in that area. Okay? Let me just check something here real quick. Okay. There we go. I was just checking my microphone levels are up all the way. Anyway, so if that's not the level that we're likely to stop at or pause at, I look back and I see that there is another area right here. We had a small rally-based drop, but that really was a test of this. We've got drop-based drop. Okay, so all these areas have been tested quite a bit, and with the dollar not having a very strong demand zone, we may actually see the euro continue to move to the upside for some time. We've been stuck in a range for a little bit. That range may be resolved now with a move to the upside if we can break above this 136. Looking above 136, the only fresh demand zone I see may be all the way up to 141, almost to 142. Let me go ahead and refresh and get the numbers there. Remember, I'm always scanning back and looking to see fresh areas. Now, there was a little pause right here, but it had already been tested once. So really, 141.48 to 42.45, that's a rally-based drop area of supply that may offer the key for the next reversal. So we may be seeing a move back up in that direction. Now, going into a smaller time frame, seeing some trading opportunities, I'll start off with a 4-hour chart. Oops. Now, with the 4-hour chart, I was looking originally at this for a potential short. Remember, we're going to be moving to the upside potentially on the larger time frame. It doesn't mean there aren't going to be some corrections and pauses that we could trade to the downside. I wanted to see if this area was fresh, and I believe there may have been a test prior to this. Not seeing it here on this chart. Let me go back further. Maybe not. Go ahead and download that info there. There we go. So we're looking at an area of 134. Actually going back, yeah, right here. I can see that there was an area already established there. This may also be a retest. So there we are. Going out to where we currently are, this was actually a test of the prior area. So I'm not going to take a trade on an area that's already been used up. We lose some of that pressure. And yes, if you're saying red because of the RSI, the fact that it is above 60 shows me that this bullish trend, although not very strong, is likely to continue. We're not seeing any kind of signs of weakness yet in the overall trend. So if we do get a bit of a pause here, which that may be the case, that we get a bit of a pause on the 4-hour chart, there may be a trading opportunity on a smaller time frame, perhaps a 30-minute chart when we get there. But I'm not ready to look for that opportunity as of yet until we get up to that area. So I don't really see anything high quality to trade on the short side. We may be able to trade long until we get there. I think this, we already dipped below 40, so that kind of weakens that opportunity as well. But I was looking at this rally-based rally earlier today. Right there. We have rally base and then strong movement out of that area. We almost tested it earlier. And it also would have been the first test of my 89 period moving average since the crossover back here. Just in case you're wondering, this is an 8-period exponential and an 89-period exponential moving average I'm using. Okay, so I was looking for the retest of that area. But unfortunately it stalled just before that. And remember, you were asking, if I was expecting to come into the demand zone, what would I see that would tell me that it's not actually testing that demand zone. Well, we can see there was buying pressure coming in, and all of a sudden things started turning around. So that would have been it. So unfortunately, I don't see any really great opportunities there. I could possibly go into smaller time frames and find something, but not even anything really there. This area, we're already kind of deep into it, and the basics too long even for a smaller intraday trade. So I'm going to be patient and just sit back, not trade anything in the euro dollar as of right now. The pound yen, since that was requested. If the price turned before the demand, would I still take the demand zone? No, I probably wouldn't, because there are going to be some people that have their orders in front of the demand zone, and that's going to weaken the area altogether. And let's see, the pound's in a free fall today against the yen. And coming down towards the origin of a bit of a demand. Right here, you can see we've got this area where we based and rallied from. I guess I can include the whole thing, this whole basing all the way through right here, which kind of weakens it a little bit. You can see that we didn't move up at least. I usually, by the way, when I'm seeing the height of this demand zone, I usually like to see the movement away from that demand zone at least 3 times the size of the basing itself. So what I'm talking about is right here. This move, for this to be a good area of demand, the height of that area of basing, when we leave that area, we need to go at least 2, if not 3 times the size. And obviously in this case, we barely moved more than 1 time the size. So that's showing me that this is not a very powerful level. I want to see fast movement away. The reason why I want to see that if I'm getting in, there's no selling pressure it's likely to hold me down. I want to see that this can just spring upwards pretty freely. And that's not what it's showing me right now. Okay? So, yeah, what he was asking now is if price turned before it reached my level, would I still take the demand zone? That was going back to what we saw in the euro. And how we came down towards that area. I forget what time frame that was on. I think it was on a 30 or 60. Oops. Yeah, this right here, where we didn't quite hit that area of demand, but we came close to it. Didn't like it. Supply zone above. Okay, take a look at that then. So going back to the pound yen, which is a pair I like to trade. I like to trade this in the afternoons because I live in California. It's kind of a dinner trade, so to speak. Well, market can correlate with yen pairs? Well, the yens themselves, you're talking about external markets. Usually it'll move opposite of the Nikkei. So you can take a look and see what's going on with the Nikkei. Kind of see that the yen will generally move opposite of that. So what I was saying about this area is that I don't really think that this is a very strong area on the pound yen. Overall move in the daily of the pound yen has been to the upside, and this is exhibiting corrective behavior where we're just kind of moving sideways, still making higher lows and higher highs, so I wouldn't be surprised to see it rallying sometime. I just don't know exactly where it's going to rally with high probability. So by looking at a smaller time frame, there's still maybe trading opportunities, and I'll be looking for longs, obviously. Looks like we got something right here. Got an area of drop, base, and rally. Nice big candle movement to the upside. It was the start of the overall move. So I like this a lot better, and this may be a good opportunity for us. You can see this, the amateurs are chasing on the downside right now with those large candles are forcing prices down. And that's usually an amateur move. So if that continues with that selling pressure running this 150.20 to 49.72, I would be looking at that as an opportunity. Why does supply become demand? Demand becomes supply? I'll answer that in a minute. There's not really a whole lot of trading here. We've got 1, 2, 3, 4, 5 candles, and then the resolution of the demand. The only thing I don't like is that we are below 40 on the RSI. So I would expect to see a little bit of a correction first before we come back into that area of 150.20. I don't think we're going to be coming right down into that very quickly, and it's going to have to pause. But I do like this area as a demand zone for a long trade My first target in this case would be my first area of supply. The one that jumps out at me is right here. Base drop, that's going to be about 152.66. And then right above that, we also have another area of supply. I would take that as my second target, just under 153.50. So what is that? 53.46. So that's the area that I'm looking at right there. You just got to be patient, wait for it to come down to that area of demand first. And like I said, with this large candle and the fact that we're down below 40 right now, we are showing some bearish pressure, but we're likely to get a correction first. Excuse me, before we move into that area of demand. Okay. Now, when does the supply become demand or demand become supply? Just when it becomes broken, generally. Now, not everyone is going to reverse and become something else, but the reason why it not why, but you asked why it happens. Well, very often what will happen is that if people were buying or selling, just think about it. If this were an area of supply that you had identified, I'm not saying it's a great area of supply. It isn't. Okay, we had small candles coming out of there, but if for whatever reason you identified this as your supply zone and you sold right here, okay, so you either sold this pair or you sold to exit a long position, you're feeling regret as prices continue higher because you're either in a losing position or you miss out on an opportunity to make more money. So when prices return to that area, many people who had sold there are not going to sell there again. They might actually buy to cover their bad positions, or they might buy because they saw that it broke out. Okay, but there's going to be less selling pressure in this area, and with less selling pressure, that becomes a demand zone. Same thing happens if a demand zone breaks. When we break down from an area of demand, you have people who are feeling regret, and therefore it reduces the buying pressure in that area because they're not likely to add to a loser, at least not at the same price. And secondly, they may be looking for an exit out of the trade altogether. So that's the reason why you have, I call them role reversals, where supply becomes demand and demand becomes supply. Okay. Hopefully that explains that for you. Covering quite a few things. Pound Kiwi, I was also looking at a possible opportunity in the downward trend. Notice, I'm going to get on this one real quick. We've got this area. I'm going to refresh this because I just moved that line slightly. Dollar Swissy, yeah, we can take a look at that. All right. Anyway, looking at this, we've got 91.68, 92.11. Nice drop out of that area. Remember, I want to see fast move away. So we've got this area where we opened up for the day, started trending down, but then based before a nice drop. And that's what I'm usually looking for a high-quality opportunity. We may end up going above 60, though, before we get up there on the RSI. Excuse me. Sorry, I keep yawning. I didn't sleep well last night. I actually have another extended learning track session I got to teach after this, too. But anyway, we may get above 60 if we move back up here because it's going to take a while to get up to that area. Can we use supply demand with candle patterns? You possibly could. Yeah, price is everything, so really just looking at price. How do we know price will reach the level as part of a big uptrend and break the level? Well, it would have to hit a strong demand zone first. We do see that it's basing right now at this area of demand. This is a pretty good area of demand. We saw lots of movement to the upside, and the fact we're not bouncing and running up already tells me the trend is still fully intact. And the trend is down. We were in a basing pattern for a while. You can see we continue to move to the downside base and likely to continue to move to the downside after that basing. My first target is down here at 189.55. So that's my first target. My second target, just a little bit below that, got another area to at 188.40. It's not showing on the chart right now because it's further off to the left. But that's what I'm looking for a nice trade on the pound Kiwi. And it's going to take some time. It may not even get up to that level. I've got a lower probability of reaching there. The other thing that might happen if it doesn't reach there, I just noticed that we started getting some decent selling pressure out of this area. Let's see. If price goes to 189 first, I won't take supply. Not necessarily, but generally, yeah. If it does hit my targets before it hits my entry, I tend not to take the trades, but not always. Let's do this as soon as possible. There we go. So looking at 190.92 to 91.13 as that area we just made rally, base, and drop. It is slightly higher than the move we had before it, so it's a fresh area. We'll see how it continues to move out of this area, but that may be a better opportunity to enter into the trade. It obviously has less risk, okay? But we'll have to see if it has a good opportunity for us. It definitely gives us good reward versus the risk that we're taking in the trade. Let's see. Oh, dollar Swiss. I was going to cover that. I do have the dollar Swiss here on a 60-minute chart. And on the bigger picture, if we go back out to a daily or even a 4-hour chart, we've been kind of range-bound here between highs and lows. So we're looking about 92 to about 97, 97.50. For the past couple months, we are near the lower end of this range, but still very, very bearish. And we're going to have to see if this bearish trend is going to continue or not. Going back to that 60-minute chart, it's not the first test of my 89 moving average, which is normally what I want for a trade. I'm going to go ahead and disable that. But we are still in a very strong bearish trend. I'm going to wait for a retest, 93.34 to 93.51, as an opportunity to enter. Notice that we based and had a large red candle coming out of that area and continuing. Like I said before, I usually want to see that the movement away from the area is at least 3 times as large as the size of the basing itself. So that's what I'm looking for right there. That's a pretty good opportunity if we can get back up to it. Okay. What do I look for? Well, it depends on how I rate the trade. See, at Online Trading Academy, we teach you what we call the odds enhancers, and use these odds enhancers to rate your trade and see if it's a high-quality trade. We don't need to wait half the time. What we normally do is just want to put in what we call set it and forget it, where you just have a limit order to catch price as it reaches your level, and you have your stop and your target put in at the same time. So you bracket your order. However, if it is going to be a little bit lower rating, I use what is called a confirmation entry. And for me, confirmation, if you notice on my other screen that I have 3 time frames generally. So if I'm trading intraday, for instance, I trade on 5-minute charts very often. You know, I'm looking for a small move, maybe 40 to 60 pips, and I'm looking for a, maybe, 10 to 20 pip risk. So that's what I put in as a stop. So when I'm doing that, if I'm trading on the 5-minute chart, I use a 30-minute chart from my broader perspective. But for confirmation, when we're in the supply or demand zone, I'll drop down to my 1-minute chart. Okay, so it doesn't matter what time frame I'm trading on. If I'm looking at a 60-minute chart for trading, and I'll go back to the dollar Swissy. All right. And we were just looking at that on the 60-minute chart. Oops, there we go. So 60-minute chart, you can see the base drop right there. I also will then take a look at it on a 4-hour chart. And for timing the entry, I might use either 15 or 10-minute chart when we get into the zone. So what I'm looking for confirmation is when we come into the zone, some sort of candle pattern. So for instance, if this were my 10-minute chart and we were in an area of supply, one of the things I'd be looking for is this. Notice the topping tails. We have the move to the upside, topping tail, and now instead of making higher lows, we break and make a lower low. That's my confirmation that the trend is reversing. So that's what one of the things I would use. I would use a smaller time frame to help me confirm what I'm seeing in my chart. All right? So hopefully that answers your question. But I'm always using a multiple of 4, 5, or 6, or dividing by 4, 5, or 6. So I have my trading time frame divided by 4, 5, or 6, and that gives me the time frame I'm going to use for my candle patterns for my entry. Okay? Cool. So going back to the Swissy, actually I already had the lines drawn out of the other chart. Here you can see my area of demand, beginning of a couple rallies there. That's going to be where I'm going to get out of the trade. But my entry to the trade is as I mentioned before, 93.34, 93.51. Target 1, 92.53. Target 2, 91.59. So those are my opportunities I'm seeing in the markets. Yeah, if I happen to see bottom tails, the tails pointing downwards in an area of demand on the smaller time frame, that would tell me that the markets are ready to reverse to the upside. If we start making higher lows and higher highs, obviously it's more confirmation as well. Those are a couple of things I'd be looking for. So on the Swissy, looking to join the overall downtrend. My overall favorite time frame to trade is a 5-minute time frame with 30-minute for perspective and 1 minute for the timing of the entry. The reason why I've got short-term trends, I can get in and out very quickly and have very limited risk as well. Speaking of some drops, the other thing I was looking at was what's going on here on the 60-minute chart of the yen, dollar yen. I remember we were seeing this on the pound yen as well, but also dollar yen. We have lots of selling pressure pockets. Yeah, you see we have this 90, 16, 99, 39. This one is also an area where we saw some good selling pressure, but it's very low in the overall movement. So by the time we get the selling pressure after we've been moving down for a while, it's not necessarily going to be the amateurs. It's more likely to be not likely to be professionals. It's more likely to be amateurs and therefore less likely to turn price around. So I'm less likely to take the trade there. So I like the 99.16, 99.39 a little bit better because it is higher up. We do have good selling pressure out of that area. We are coming down towards a couple of demand zones right now. 97.85 would have been my first target, but we may actually hit the target first before we start to rally back up into that area of supply for me to short. So I'll be keeping an eye on that as well. Gold, I have to see if I have gold on this particular chart. Let's see, it'd be GCQ13. Not enabled for the futures on that one. And I don't think I can do it as a currency pair on this particular platform. Let me just check. Nope, can't. Sorry about that. Oh, we can take a look at the Aussie dollar. I thought I had something going on there too. Yep, there we are in the Aussie dollar. Remember, if the dollar is going to be in decline, you would generally see gold prices moving to the upside. And I can try to log in on a different account and see if I can get into gold real quick. But right here you can see that we've got rally-based rally in the Aussie dollar. And that area of demand, 92.11, 92.22, if we come back down to that area and we come into it quickly, I'll be looking for a bounce there. And my first target, 92.82. The second target, I don't know if I actually have one. Let's go back further. I don't see one on this frame. Let's go out to, well, that's a 30-minute. I'll just go out to 120. Multiply by 4. There we go. Now we can start to see some new highs. Well, this area back here has already been used. We don't really have anything to stop us until we reach the old demand, which is 94.38. So we could see a move to the upside. Can we use the system with all commodities? What do you mean? As far as looking at supply and demand and reading price? Yeah. Absolutely. Let me just see here real quick. Work offline. Work offline. Work online. Just got to take that off so you don't see all the passwords. Okay. There we go. Okay, so nobody's on this account. That's good. This one. All right. As far as my time frames, I use my 30-minute time frame for perspective to look at the overall trend. I did a webinar some time ago on multiple time frame analysis. I can do another one. But the 5-minute time frame I use for my entries, and then my 1 minute I would use for timing the entry by looking for a chart pattern as an entry into the trade. Okay. So going into gold now, let's go I'll just do this at GC. There we go. Now we can see gold. As a matter of fact, though, I want to go at GC equals, I think I went 120. Get an unadjusted chart here, get a little bit more accurate data. Okay, so looking at this on gold, you see we bounced off this area of supply at 1347 recently. Okay, I'm seeing some weakness today, but the overall trend now has begun to the upside. And if we do pull back to areas of demand, our next area of supply in gold is not until about 1372. You can see there's an area of rally-based drop. I would actually lower that bottom line a little bit more right there. So let's see what the numbers are. That's taking a while to refresh. There we go, 1371, 1377. That's what we're looking at there. And looking at the bigger picture, I'll go out to daily or weekly chart. I think it's the weekly chart where we saw demand. We are starting to see a little bit more bullish pressure. You can see that as far as our move down, we came all the way down into this area of demand just under 1200, which was interesting because I actually predicted that in one of the extended learning track classes that I was teaching. And I predicted it some time ago. People didn't believe we'd break 1200. And sure enough, we did intraday. You see, or intra-week, I should say, we broke down right into the origin of the move to the upside. Okay? It was a multi-time frame webinar there in FX Street. I did do one, I believe, some time ago. It would have been several months ago. You'd have to look at the archives. But as we were moving back up, be careful. This 1370 area, if you notice, is also an area of supply right here. Okay? So we're coming in towards that supply zone, so therefore when I'm looking at a smaller time frame, I'm going to be looking at that area as a possible bouncing point for a reversal, 1372. Okay? Confirmation will wait for a strong signal. Yeah, exactly. So if I'm trading on the 5-minute chart, the 30-minute chart I use for my perspective to get an idea of where the overall trend is and where it might change, and make sure I'm trading with the overall trend. Okay, I do that on the larger time frame. That's the 30-minute. Then I find my actual trades on the 5-minute chart to figure out where I'm entering, where I'm exiting. And then on the 1-minute chart, as I'm in a supply or demand zone from the 5-minute, I would use the pattern that I see on the 1-minute to confirm the entry. That's if I use those multiple time frames. Okay. All right. Unfortunately, I got to get going. It's already 7:45 here in California, so hopefully I was able to shed some light on a little bit how I trade, and I'll be with you guys again in some future webinars here on FX Street. But I actually have to get ready for a lesson I'm teaching for Online Trading Academy, the extended learning track. So I'm going to be taking off now. If you got any questions, let me know. You can go ahead and send an email to us, and I will see you again very, very soon.